more, but for now I want to turn back to the major indexes. Joining me now is Michelle Schneider, Chief Strategist at MarketGauge.com. Michelle, it's great to see you today. Mixed market that we had officially at the close. What do investors need to know?
Well, as much as it's hard to wrap our heads around it, we still are in this very persistent trading range, which means that anytime we get close to the top of the range, you got all the excitement and the bulls come out. And anytime we kind of either flounder or get closer to the bottom of the range, all the bears come out. When the truth is, we're really just kind of stuck right here because of all the different various economic news out there, not just in the U.S., obviously, but also globally. And of course, here we are at earnings season, which will be hopefully pivotal, or at least some way make a decision for which way the market wants to go next.
What do we need to hear from this earnings season, Michelle, as we do await these results from Tesla in the after hours to get us out of this trading range one way or the other?
Well, I think we need to hear that, first of all, the companies are relatively optimistic that they have gotten past, the incredible rate that we saw the Fed raise interest rates, and that might be coming to an end, and that consumers are still strong, and also that they've been able to survive the cost of raw materials and that those raw materials won't go up much further. I think it'll be more about the forward guidance than exactly what the earnings are right now, and we can already see that, except for a couple of exceptions, the banks started out, people thought that was going to be disastrous, and it turned out not so bad. So that's what we're looking for here.
Let's talk inflation, too. I know the last time you joined me, we talked about some of the inflationary pressures that existed out there. Where do we stand on the inflation front, and what does that mean for the market?
Well, this is such an interesting thing because, Kristin, right now, UK came out today with 10.1% inflation, really high, double digit. While here in the United States, we seem to be cheering our lower recent CPI and PPI. So what it tells me is that where you have to look for inflation still remains insidious, and food is probably the number one place to look. We've had soaring prices in sugar and coffee, and the statistic came out that rice now is in short supply because of Mother Nature concerns in Pakistan that had huge flooding in the fall, and China, another big producer, that's had drought. So what can happen here is we can get awfully complacent. People can run into the market if things look better, if the Fed looks like they've done their job. And meanwhile, this can cause some kind of global shift because you can't just throw crops in the ground, especially with Mother Nature not cooperating, and expect these food prices to come down that quickly after years of low production. So that's where we have our eye.
Mm-hmm. Are there certain sectors, Michelle, even stocks that you think might be buying opportunities right now? Perhaps other stocks or sectors that you think could be worth selling at these levels?
Well, that's a great question because I am very keen right now on watching some of the live streaming on the global stage, particularly in sports and in music. So we like stocks like Paramount and Formula One, Live Nation potentially coming to life. And then I'm also really keen on some of the beauty areas. I've been watching Coty, which has been endorsed by Kim Kardashian. That stock has basically doubled this year, and it looks like it still has more upside. I also really still like some consumer staples. If we don't get crazy in the inflation realm, some of the stores like Target still look very undervalued if the market holds up here. Defense looking good. So there's lots of different places to go, but I would not take my eyes off of the commodities either. Copper, silver, gold, they're still holding up very well. Platinum is going up as so kind of keep your eye on these areas, but always be ready to pivot if those inflation numbers start coming back.
Mm-hmm. Well, let's talk about the path forward. Michelle, for inflation, of course, the Fed set to meet May 2nd through 3rd. The market pricing in another quarter percentage point rate rise come May 3rd. That is, where does the inflation picture go from here according to your forecast? What does that mean for the Fed? And thus, can the stock market grind higher?
Well, the market could definitely grind higher. And yes, the expectation is for 0.25%. So if they stick to the expectation, that's probably already in the market right here. But if they become more aggressive, that would be an issue. If we get through earnings season relatively unscathed, that would be a plus. And I do believe, though, that we still have other factors like debt ceiling and geopolitical issues to deal with, that we can keep inflation sort of on the back burner. But I still maintain that things that just don't resolve this easily. There's something else out there that I'm smelling. I can't exactly put my finger on it. But I think for now, if the market holds, follow the party, but don't think passive, think more active. And if the market starts to turn or inflation numbers start to come up or any of these geopolitical concerns start to really poke their heads out in a stronger way, then you'd have to get more defensive, and in which case I would probably go to the technology sector, maybe even ARC as a short, or a couple of other areas as well, perhaps in the banking and in the retail sectors that already have shown weakness.
How long do you think it's going to take to get this banking situation to iron out, especially for some of the regionals?
Well, if you look at what happened today, the regional banks actually kind of led this rally in that they came in a little higher, they went lower, and then they started rallying again. Schwab has done well. Zion Bank came back. So I think right now the market is saying the banking issues are over. So at this point, that would not be my major concern. More the fallout maybe from the commercial real estate area, but even that's not a major concern. I have to say my only real concern right now besides geopolitics is what happens with this food, because we know that globally things can get dicey when people don't have enough to eat.
Yeah. That's very true, Michelle. We have time for just about one more question here. So in terms of what else investors need to know ahead of the well-known sell in May, go away trade, what should investors keep in mind?
Well, let's talk about that sell in May for a moment. We have this very interesting 2-year business cycle going on right now, which is why we're in this range. So we have 2021 up, 2022 down, 2023 really stuck right here. So I would say my biggest tip at this point is watch what happens here at around 420 in the SPY, 320 in the Qs, maybe over 180 in the small caps. And if we can get through there, then we're passing by a stagnation and potential into some expansion. And if it can hold, great. And if not, like I said, be nimble.
All right, Michelle Schneider, Chief Market Strategist at MarketGauge.com. Michelle, thank you as always.